Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, don't forget to check out last night's pivot points and evening recap. That included a look at the daily chart along with the pivot points, talking about the bull case and the bear case. For the purposes of this video, let's look at a 15-minute chart of the ES, talk about Globex, and see where we're headed. You can see the daily and the 3-day pivot are important tonight. They were last night and they've been important this morning. 3-day pivot right here, 1686.83, provided support during Globex, and then they bought it off the Europe Open, came back to test daily pivot down at 1690, and that is held. And we're currently trading 1694 half. Over here you've got yesterday's high 1695 half. So we'll have to see how price reacts, but I feel very strongly about what I said last night, and we'll pop out to the daily chart anyway. If you see new highs today, I think that 1700 becomes just a fait accompli. It's going to happen. We've come too far. We're too close not to hit 1700. I was saying that on the 82s. We've come too far. We are too close. If we hit 85, not to go all the way to 1700. It hasn't been a ramp, it's been a grind, but we've done it. Now we've got dojis the last 2 days. There's some uncertainty in the market, but at the same time, the bears haven't pressed the case. You don't have that big down day. You don't have this day. And every real big down day, pretty much, during the course of this uptrend from 1340 quarter, has been on news, whether it's been Cyprus or the Fed or something happening, and we don't have that right now. If 2013 has taught us anything, it's that in a vacuum this market goes up, meaning absent news, absent economics, market goes up. We've got new home sales today at 10 o'clock. Again, a day where there's really not that much exciting going on economically. We're in the middle of summer. It's certainly trading that way. It's basically flatlining in the middle of the day, basically. So in the absence of that, the bears have really got to push, and they're just not pushing right now. So 94 half. If we do highs, I'm looking at 1700 to 1703. If we pull back, if we break, you have to break 85, 86. You have to get down into the weekly pivot at 82 and break that. If it's a rollover, I think the best you do is this 1649, 1650 area, even call it all the way up to 1651, since now you see the middle band getting involved. This was that area that I had been talking about all along as a retrace area, because it was a test of this former resistance that had become resistance again, and then we broke through and broke out. I think this line needs to get retested. The timing of that retest, though, is unclear. Bulls are in no rush to do it, and the bears are in no rush to let them. If you are swing short, you have exposure all the way up to effectively 1717 to 1720. If this market's going to pull back the way it has, with a punch through the upper band, that's your risk right now. So you better be going slow and small, because you potentially have another 20 to 24 handles of upside coming if the bulls really get a push going. Okay, everybody have a fantastic day. Mike Vacchi, PrincetonTrader.com. I hope you'll check out our website, check out last night's webcast with the pivot points, check out the chat room, 2-week free trial, and I will be back tomorrow morning with another webcast. Trade 'em well, everybody.